Let's do it live. Let's do it live, baby. Yes, sir. Let's do it live. Oh, yeah. Another day, another shenanigan, baby. Yes, sir. Yes, sir. And the show continues. The show continues. Yes, sir. The shenanigans at play. GME being held down. Opendoor is ripping because why? We'll talk about that. And a great opportunity right now with RKT. That is rocket, baby. Been talking about it. Been telling you guys it's the way to go. It's the next one to get ready and then just take a nice little pop. We are here. We are here. So, yet again, live. It is I, the Savage of Wall Street. Good morning, my fellow simpletons and degenerates. It is another day, another dollar. We're ready to trade. Market is open, and we are taking advantage of whatever it is that the market offers today. How are you, my friends? Yeah, here let's get a little more space. Yeah, all right. We are here once again, going live and seeing that the market is kind of a mixed bag today, right? Um, some stuff is up, some stuff is down. It seems like the market is just trying to figure out, what sector it wants to favor. And then we get some unexpected news because obviously the economy is great. There's absolutely nothing wrong. There are no favorites in the stock market. Nvidia's going to $1,000. Tesla's going to $3,000. Why stop there? $1 trillion packages for CEOs are a normal thing, and unemployment higher than it's been since the pandemic. People cannot find employment. We have a ridiculous and record amount of university grads that cannot find a job, but hey, the stock market is at a 52-week high, baby. So nothing is wrong. Don't let your lying eyes tell you what you're reading is in fact true. What you're seeing is not the truth. Don't don't believe your lying eyes, right? Good morning, my fellow simpletons and degenerates. It is I, the Savage of Wall Street, once again going live on this wonderful Wednesday. Just getting ready for another day of trading, right? I already started in the morning. I saw where the opportunity was, and existing home sales, my friends, existing home sales up 800,000 in the past month. That is awesome. Remember, I told you guys, I said, and I don't know if I live in a microcosm of what America is, right? But we live in a nice little neighborhood, and around here, surrounding neighborhoods, I have not seen as many for sale signs when it comes to homes, right? In years, in a lot of years. And sure enough, I'm seeing just a ridiculous number of, house for sale signs everywhere. And it makes sense, right? I think we talked about it in a few weeks ago when I was saying that, the rate cut before it happened, right? I was saying the rate cuts are happening and we're going to get a couple this year. We're definitely going to get some next year. And in anticipation of that, people are jumping in and people are, taking advantage of the fact that there's going to be some opportunity to refinance, I guess, next year or later on, right? So they're willing to take a nice little hit right now and then refinance. Well, existing home sales up, I guess, 800,000. The estimate was like 550, 600,000. I don't know who's got the money to move right now, but see, here's my theory. Here's my theory. My theory is that People that bought their homes in 2010, 2009, 2008, those homes have almost doubled in value at this point, right? The economy is not doing that great for the average American, right? And so could it just be that there's people that are downsizing, you know, um, and said, this is too much house for me. I don't want to be paying this right now. I'm going to move to a smaller home. And are there people that are selling their home because they can't afford the payments and they rather rent? Um, could it be a combination of those things, right? So what are look, um, those are the nuances that we have to look at, right? And so take it with a grain of salt, and take advantage of the opportunity that it's creating in the market. That's kind of what I've done. And, for me personally, this is great news. This is great news because I did tell you guys I bought some $7 cash secure puts for 160, 165, Opendoor, right? And expiring November. And those are worth a lot less now, right? Because the stock is up, 12%, something like that. On the news that existing home sales are in fact up, and right now open is up 10%. It's juggling between 10, 12, right? It could go up a little more, maybe down a little more, but the point is that if you would have taken a chance on those cash secure puts yesterday, right now you make a little money. Okay, that being said, I don't think these guys were counting on the open army to be as active as they are. I see that the stock falls around $7 and people are just like, it's at a sale. It was just 14. I'm buying. You know, um, Nobody's selling. This is kind of like, it reminds me of GME. Very interesting to see. Now, am I saying this is the next GME? I'm not saying that at all. Um, but there are a lot of similarities on what's happening now and then what happened then. But I see more similarities between Opendoor and Carvana. Now that is very interesting too, because what happened with Carvana? The shorts got incredibly aggressive, and they got they pigged around and found out, right? They got greedy. They got too greedy. They were trying to blow up, the company and have it, file Chapter 11, and they didn't. And then it went up to like $200-300 a share, and they had to eat it. They had to eat it, right? So, okay, where are we right now? Opendoor's 10%. If you bought the stock, at, I don't know, $3, $2, and then it ran up, you sold some covered calls when it went to 9, and yesterday you bought them back, which is what you should be doing, right? When the stock falls 20%, 25% on a day, you buy back your covered calls. And today, guess what? The stock is up above 5-10%. You sell a covered call. So if you're in open right now, you have not looked into it, because you don't follow this channel and it's your first time watching, right? Uh, let's say you could go right now to November and sell some $10 covered calls for one. You could have gotten that. So probably one of you guys got 168. But right now you could get $145 to $148. Go in the middle, go to 147. See if you get filled. So basically the stock is, the stock hits at 782. You're basically saying I'm willing to sell it, for $10 a share in November. Give me 150. What is wrong with that? There's absolutely nothing wrong there. You know, these are things that you can do to safeguard against all this volatility and get paid for it, right? So just something to think about. If you have not thought about that, well, that may be something that you may want to think about. It needs a $2.20 move. The stock does, and then you're going out to November, and you're taking in, almost 1/4, of what the stock is worth, like 20%. So there's nothing wrong with that at all, my friends. Get paid to hold the stock. All right, what do we got here? Who do we have in the house? Beach Boy with number one. Beach Boy, what it is, my friend? I hope you're doing well. Good morning. Double D, good morning. Mr. P in the house saying hello. JJ's in the house saying hi. Yo, Savage. Always Be Writing is in the house. And Zed, Estate BC, in the house. Yes, sir. We are here once again, going live and seeing what the stock market's giving us. We're seeing that Opendoor is up 10% right now. Those $7 cash secure puts that we sold yesterday are looking lovely. If you're holding the stock and you bought it at $3 or $4, $5. Right now it's up 10%, and you're trying to see if it's going to go to 9. Probably not, but you could take advantage of that and sell it for 10, hypothetically. Go to November, say, hey, I'm willing to sell you my stock for $10. Give me $1.50. Somebody probably will. So basically, you're selling for $11.50. Stock's at $7, $8. So you're selling for $3.50 more per share. Per share, right? You have 10 of those. You make yourself $1,500 today, right now, this minute. Pay your mortgage with that. Pay your rent money, right? Pay your rent. Pay your bills, credit cards, student loan. So many ways you can use this money, right? And then, say for whatever reasons, Opendoor is $10, in November. You can say, hey, I don't feel like selling it at 10. Give me 11, and give me some more money. You could roll from November to December, up $1 on the strike, so you get an extra $1,000 because you're doing 10 contracts, right? And then you're gonna ask for like another $1 in premium, so another $1,000 to you. What's the problem? It's no problem at all, my friends. But you just gotta have a plan. You got to have a plan. You also have to have an exit plan. What if the stock falls like to $6? Then you can go buy back those covered calls for like 60%, 70% less, right? And then you can go through a cash secure put. Do some cash secure puts, bring in some premium, use that premium to buy some more shares if you want right then and there, and then sell more covered calls when on a little pop, which will happen. Take advantage of the opportunity, take advantage of the volatility. Look at, volume when you're selling your covered calls, right? Go to different weeks and look at what the open interest is. Look at the volume, right? The more volume, the more open interest, right? The more dancers on the floor, baby. Easier for you to come in and out. You want a spread of like a cent or two between the bid and ask, so it's easy to come in and out. You don't want a spread that's like 25, 30 cents, because those are, you could do stink bids and stink asks, of course, right? But for the most part, you want somewhere where it's easy to come in and out, so that you can come in, out, buy, sell, buy, sell, buy, sell, sometimes 3-4 times in a month. Just take advantage of the opportunity. What's wrong with that? Get paid to hold the stock, right? Your portfolio is your building. It's a building that you own, right? You're the landlord, and then the stocks that you own are your tenants. Have them pay rent, baby. Ricardo Canales in the house saying, Savage, I sold 2 cash secure puts, $7.50 for $6.20 till January 16. You sold 2 cash secure puts of $7.50 for $6.20. I'm trying to figure out what you're talking about, Ricardo. You got to give me a name, a ticker. It's not Opendoor. There's no way they would have given you 620. Oh, ASST. Oh, careful there. I'm not condoning anybody to go in the ASST right now. It's extremely volatile. Look, I enjoy this shit. This is what I do for a living, right? So to me, it's just, I do a lot of studying. I do a lot of reading, an insane amount of reading. Sometimes not healthy, I think, but because at 3-4 in the morning, I'm doing stuff. But anyways, I'm very interested to see what happens. I have 25 contracts, cash secure puts, $5 strikes on ASST, and I got on average, I think 345 or 355 back for that $5 cash secure put. So I'm good until 155, I think, on the price of the stock. And if in a couple of weeks, if the stock is anywhere above that, like it's in the $2 area, 250, I'm gonna get my shares, right? And then I'll go on market price and just sell them, and I make money. If the stock runs to like $5 or whatever for whatever reasons, guess what? I get my collateral back. I get my money back. Great. This is gonna be like the best trade of the year. So high risk, high reward. I don't condone anyone getting into that. I do know there's some people that are on the Discord and all obviously here as well, um, and have literally done credit spreads for free. I don't know. They put a stink bid and stink ask it, and it's just basically they do like a $5 credit spread, and it's like I 350 150 type of situation, and it's just like there is no risk, like whether it goes up or down, they make money. It's insane. Like, where's the risk? I don't know. Wing Commander is the one that did that, and it's just it's amazing the things that you can do when you know what you're doing, right? So I don't do put spreads. That's just not, I'm a cash secure put guy. I like to see, I like to see that I have stock available because I love to write cash covered calls, right? And then I bring in premium. I like to get paid on the way out, on the way in, while I hold the stock. Is just how I work. And there's nothing wrong with that at all. And look, cash secure puts just take too much babysitting for me. I already have 3 kids. I'm sorry, not cash. Credit put spreads, so or call credit spreads. Too much babysitting. I um I have 3 kids, and I already have a lot of attention that I have to divert to them, and then I trade. I'm also kind of like holding it down in the house right now because my wife went back to work. And although sometimes she works from home, I kind of have to take care of the kids and all that stuff, make their lunch, dinner, all that stuff. So my days get kind of. I have a lot of time sometimes, and then I have no time. So the less amount that I have to think about the market, right, the better. Which is why I like doing my cash secure puts, because once I set them, forget them, and then I do my covered calls. I see opportunity, I go, I get a nice chunk, forget them, and then I'll see what happens. I see what the market gives me. If it goes up a lot on a specific day, I buy back the cash secure puts. If it goes down a lot on a certain day, I look at buying back covered calls if I have to or if I need to, and then that's it. It's not rocket science, but it does take some getting used to, right? You can't get caught flat-footed, and you can't, you have to be able to withstand seeing, your portfolio be up 10% one day, down 10% another day, and some people can't handle it. But once you do this long enough, you desensitize yourself. You don't get that pit in your stomach that you used to when you begin, right? If this is your first time watching me, and you are a new trader, that, once you go into like a specific position and you see it drop 10, 15%, and you're like, oh, you get that pit in your stomach, and you're like, oh, I need to get out. I need to get out. I lost 15%, 20%. This is not for me, and it's just like that's what all these market makers want. This is why 90, 91, 92% of retail never makes money. They always lose money when they come into the investing side of things, right? And then they start kind of handling their own portfolios because they know you can't withstand that. You're gonna get angsty and you're gonna sell for a loss, and they love that shit because they make a lot of money on your inexpertise. But the longer you do this, right, the more you start figuring out how things work, the more experience. And this is where experience comes in. And it's just, there's people that, especially at work, they ask me, what's the one stock, and how long do I hold it for? It's like, dude, like if I knew that shit, I would not be here, right? so, so it's just interesting because nobody wants to do the heavy work, right? Nobody wants to take the experience and the time to learn and give it the experience, learn the trade, right? Do the heavy lifting, so to speak. And you're gonna have to do some reading. You're gonna have to do some work. You're gonna have to take your bumps. But at the end of it all, time in the market is always gonna outperform timing the market. And you could have all these graphs. You could be an expert in graphs, RSI, Bollinger Bands, Fibonacci's, right? moving averages, and then you could be a genius, right? But sometimes the market does what the market does, and people get angry. I know actually a couple of traders. I follow Tori's trades. I don't know if you guys know about Tori, but she's the real deal. She's really cool. She does futures. I kind of stay away from those, but anyway, so she just went into a position because I guess one of her mentors got really excited and was like, look at these numbers, look at these bands, this is looking prime, and then she went in heavy, with like $150,000 or something like that, and she lost like half of that, like that, and she actually made a video about that, and she said, that even trading over 10 years, 15 years now, you still take your lumps, because you think that you are smarter than you are. You think you're going to outperform, the market. You think you figured it out, and then you get punched in the mouth, right? And like Mike Tyson said, everybody has a plan until they get punched in the mouth, and then your plan changes, right? So you got to know that you're going to take a loss. If you go in knowing that you're going to make mistakes. You're going to make mistakes. You're going to take a loss. You're going to do stupid shit, right? That's okay. You have to be okay with that. But as long as you can come back, right? You get up, you figure it out. You say, I'm going to learn from that mistake, and you move it. You keep it moving. You'll be fine, And then go to the next trade. Go to the next trade. I don't know if you guys are familiar with football, right? And then I played defense when I was younger. I played both, actually, offense and defense. But whenever you were on defense, right, and then my teammates were some of the best cornerbacks, and these guys would get scored on. The coach would just go up to them and say, "You got to have short-term memory. Short-term memory. That happened. It's done. Forget it. Move on and keep defending, because that guy is good, and you can still, you can still get out of this, unscathed, so to speak, if you just lock it down now. So you got to have short-term memory when it comes to making mistakes, and you just keep it moving. You'll be fine. All right, so let's see. Ricardo Canales is saying ASST. I figured. Okay, cool. Good morning, Savage and all, says KC saying, good morning, all. VIX hit over 17 yesterday. Took a deeper look at UiPath, and I like the tech. The leadership looks great. Bought some shares, and let's see where this goes. Good. I like UiPath. I've been talking to you about UiPath when it was like $9-10, and it's a really, really good company, very well ran. It's the premiums are not as sexy as other ones that I trade, but this is a solid company. It's a company that that it's kind of like Sentinel One, right? It's not going to give you 10% a month, when you trade it, and you do cover calls, cash secure puts. It'll give you a good 5%, maybe 4, 5, 6% at the most. But it is a very good company to own, and it's just they're going to keep getting better. They're going to keep growing. And that's essentially what you want, right? You want to mitigate your risk. You want to go into a company or companies that in the long run are going to be here in 10 years. You don't want a company that's like, taking all these risks and losing money and like, and that's all they're doing is just, this cash burn is ridiculous and they don't have, a very long runway. And then next thing you know, they're like in debt. And it's just, you want a company that's very well ran, very well managed. You got to look at their board. Their fundamentals have to be good. And then you say, you know what? This is kind of where I'm going to post myself. I'm going to take a nice little cash secure put position to try to bring it in towards a cash secure put. If that doesn't work, then you do it again and you do it again and you do it until you get your shares, right? And then you take a position. You have your shares and you hold them. You wait for the stock to run up 5, 10, 15% on a day. Sell some covered calls, right? Up a strike or two from where it is that day. Get paid to hold the stock. There's no magic bullet here, right? There is no like rocket science that we have to think about. This is just doing it, and it's and you're gonna have to get obviously if it's your first time watching and you don't have like a brokerage account, you're gonna have to open up a brokerage account. put some money in it, and then kind of you got to call them and say, hey, I want some options to be available, and that's it. All right, here we go. Ricardo Canales is saying only 130 to break even. That's cool. That's cool. Tom Kaufman saying, Savage, you're live. I am indeed, my friend. Misty Tree Woodcrafts, ahoy, lucky 14, he says. Misty saying, damn it, wrong account again. Oh, well, I'll switch and give it another thumbs up. It's all good, James. James of the Trees, lucky 15. For real, you guys. Now it's for real, baby. Hey, Savage saying Cindy B. Susan Shouter saying I'm here. You are indeed. Good morning, Susan. This morning I began gradually accumulating GME calls. October 3rd, 2027's 5s, November 32s, 27.5s. You kind of close there, buddy. I don't see the. I see. I mean, I see why you're doing it. My thoughts. I don't accumulate calls, brother. I accumulate stock. So I mean, what were those? How much were those calls, right? I know why you're doing it, and I mean, but I my thing in this channel is I try to mitigate risk, right? And I do want to create 100 millionaires that watch me regularly, right? And I don't want people to get into the habit of buying calls, especially such short-term calls, because the chances of you making money are like 8 to 10%. 90 to 92% of the time, you're going to lose when you are buying calls and buying puts. I want you guys to be the casino. I want you to be the ones that are selling the cash secure puts. You are selling the covered calls, because I want you guys to have a better chance at winning 92% of the time, right? So that's why I want people to stay away from calls and buying calls and buying puts, because you're going to lose most of the time. I mean, I know why you're doing it. Good for you. That's all I can say, right? Like, tell us how it goes, right? I think that there's so much against that right now, because they're trying to keep they're trying to keep that delta, that theta. They're trying to keep everything kind of sitting tight. The powers that be, and they're hoping you do this so that you could lose your money very quickly, right? Those contracts are going to burn rather fast, because how many trading days do you have before October 3rd in reality, right? We have today is pretty much done, so then we have tomorrow and Friday, and then we have 5 days next week, so that's 7 days, and then a couple of other days. I mean, how many tradings do we have? So whatever money you just paid for that. Let's say you paid 150, right? So you're going to lose $20 a day basically. So if those don't move for whatever, they're going to keep it under 27 for whatever reasons. That's the number that they're using. You're gonna keep losing money every day. And yeah, okay, so maybe let's say it pops, to 27.50 to 28 October, right? October the 3rd, October the 2nd. Yeah, you're gonna, that those calls are gonna gain, but they may come back to where, like, almost where you bought them, but you're still gonna lose money, because the premium is gonna eat away, right? So I don't know. I'm curious to see what happens with those, right? I'm very curious to see. But like I said, I kind of want to get people kind of like to sell cover calls and sell cash secure puts, so that you guys don't get yourselves in trouble, and you make money more often than you lose. Susan is saying 17. JJ double post. Sorry, it's all good, my man. Susan, please talk about RKT and its 47% short interest. Are you still in it? I am. I just right now, Uh, I I I sold some more $3 cash secure puts, some more $20 cash secure puts. Expiring November, December. I brought in $3. So I'm all in. I mean, especially now that these numbers came in, right? With with the 800,000 newly sold homes in the last month. So these guys are also acquiring. I mean, they just acquired. They acquired Redfin, right, and whatnot. So, um, 2 days ago, Fortune 500 told us the home sales were headed for the worst year since 1995, right? So, um, but what did we see today? Existing home sales, are actually up right now. So, you want to talk about RKT? I'll show you what I was reading. All right, let me share my screen real quick. All right, here we go. All right, here we go. Um, Recent news for rocket companies. RKT focuses on its major acquisitions of Mr. Cooper and Redfin, which are changing its market strategy, as well as its latest earnings results and the analyst ratings. Major acquisitions and restructuring. Mr. Cooper. In September 2025, Rocket announced the Nation Star Mortgage. That Nation Star Mortgage, a subsidiary of Mr. Cooper, delivered a conditional redemption notice for these three series of senior notes. This move is a step forward or a step towards finalizing Rocket's pending acquisition of Mr. Cooper, which is expected to close in the fourth quarter of 2025. Rocket, subject to regulatory approval. The acquisition is expected to greatly expand Rocket's servicing portfolio. Redfin, the all-stock acquisition of real estate brokerage firm Redfin was completed in the second quarter of 2025. According to Rocket CEO, early results show positive synergy with an expanding purchase funnel and rising conversion rates. Organizational streamlining. In the second quarter of 2025, Rocket simplified its share structure to two classes and announced it would exit non-core businesses like Rocket Mortgage Canada and its co-branded Visa credit card. Quarter 2 2025 financial results. Performance. The company reported strong second quarter results on July 31st, 2025, exceeding revenue expectations despite a challenging housing market. Revenue. Adjusted revenue was 1.34 billion, above the guided range. Profitability. The company reported GAAP net income of 34 million, though GAAP diluted loss per share was 0.01 cents. Adjusted EBITDA came in at 172 million, while adjusted diluted EPS was 0.04. Liquidity. Rocket maintained a strong liquidity position of $9.1 billion at the end of the quarter. The mortgage volume. Rocket Mortgage showed year-over-year growth with a 13% increase in net lock volume and an 18% increase in closed loan origination volume. Analyst ratings. Hold is the consensus as of September 2025. Analysts generally have a hold consensus rating on RKT stock. But the reason is because rates are too high. And the fact that, people were not really selling homes and buying homes because the economy is in flux, right? But 800,000, new sold homes just are telling us that people are now ready to move to a brand new home because rates are on their way down and they're probably going to restructure their loans in the next year or two, right? So, what does that tell us? Recent upgrades. Analyst Bank of America upgraded the stock from neutral to buy in September, and BTIG initiated coverage with a strong buy rating in August. Price targets. Recent analyst price ranges from 16 to 25. I'm saying 30. However, the current consensus price target of around 16.50 suggests a potential downside from its current trading price. We were expecting 550,000 um, new homes to have been sold the last month. We just outpaced that by a quarter million. Okay, so do you think that this company, RKT, is not going to take their piece of the pie, especially once the once the Mr. Cooper acquisition comes through? They have now, acquired Redfin, so that piece of the pie is there. Um, you guys tell me. As far as the short interest, another thing, shorts got too greedy, right? They got too greedy. They thought this is going to nothing. This is going to nothing. And then the news with Redfin being acquired came in, and they said, "Fuck," and they try to cover. They try to cover. Right now they're sitting tight. And then the news with Mr. Cooper came out, and now they're just kind of figuring out that they may need to cover like quickly. If RKT, if the next earnings shows us that they've indeed blew it out of the water, this shit's going to 30. Okay. If we keep cutting rates, and I estimate, we're going to get 2 more rate cuts the rest of the year, right? And then we get 6 days next year, this stock is going to $40, man, easily. But it's all speculation. The question is, where are you at, right? Do you think that we're going to be, you think the housing market's going to crash if the interest rates fall to like 2%, 3%? I don't think so. I think people are telling you right now that we are okay buying new homes, and we're willing to take that step because we're going to refinance later on, even if we have to pay a little more in interest rates for the next year. We're going to refinance, because the market is where it is. They want a new home. They want to move to a bigger home. Or somebody said, you know what, I'm going to move to an apartment because, I need to take some money and sell my home because I made a really good profit and I want to lock it in. Whatever the reasons why people are selling and buying, right? 47% short interest. That's where we're at. That's insane. That's an insane amount of short interest on a stock that has got a future, on a stock that is set. It's just rocket fuel right now. So that's why I'm just, so bullish on it. I tell people, look, where is the stock at right now? I don't know what's going to happen, right? Because I'm not a fucking, I'm not a savant or what is it called? People that predict the future. They're not Nostradamus, right? I know the stock is 1946 right now. That's what I know, right? And I also know that if I sell a cash secure put, a $20 cash secure put that expires in December, you could get $305 right now. Essentially, you're buying the stock at what? $16.95. Stock sitting at 1960, 1950. What is wrong with that? What is wrong with that? Look at what is in the future. Look at the pipeline. Look at what's happening, right? Look at rates are coming down, right? This company is a real estate company, legit real estate company. Do you honestly think that this stock is going to be at 1950 cents, next year? The insiders are buying. There's a reason. There's always a reason or 2 or 3 or 4 on why people sell their stock, right? Insiders sell for a myriad of reasons. They got a fucking for tax reasons. They need to, they need to acquire some capital. They want to take a profit. They whatever reasons. There's only one reason, one and one only, why they buy their stock, and that is because they believe that the stock is going to be more expensive in the future. That's why they're buying it now. There it is, my friends. So what do I know is going to happen with RKT? I don't know, right? Nobody knows. And whoever tells you that they know is full of shit and is trying to sell you something. Why do I know? I know the stock is 1950 right now, 1948, this second. And I know that if I sell a cash secure put out to December, I can bring in $305 to $310 right this second, thus acquiring the stock possibly for $16.90, $16.95. On a very conservative note, okay, the 52-week high was 22.56. It's $19. Okay, once we get another rate cut, and we will get another rate cut, You think that's going to be positive or negative for this stock? If we get three more, do you think it's going to be positive or negative for this stock? Do you think acquiring Mr. Cooper is going to be positive for this stock? These are not questions for me to answer. Like, I know where I stand. Like, I know I'm putting my money where my mouth is, right? I like to make money. I'm not in the business of losing money. That's not why I made this channel. I made this channel so that I can make, 100 millionaires. People that are watching me could one day say, dude, you know what? It's been a good run. I can't believe I just made my first $1 million. And I can't wait to read that many times over. And so anyways, stocks at 1946 right now. With the news that just happened, right? 800,000 more homes being sold this last month. Why do you think that stock is down instead of being up? Could it just be that shorts are fucking fearing what can happen and they're just short laddering it right now? And they just know if they let this go right now, it's a fucking wrap. Because if I do no shorts, they're not just in this stock. They're at GME, they're at Opendoor, they are here, and C3.ai, because that's what they do. It's the adrenaline for them, the possibility to fucking to push a company to nothingness and to have them file Chapter 11. That's what they fucking love. But they're fucking psychotic. But where do you stand? Do you think this company is going to $0? Andres de la Torre saying I stay away from buying calls and puts. It's all good, my friend. It's all good. I mean, look, I'm not saying that buying calls and puts is bad. I'm just saying that's not what I want to I want people to take away from this channel, right? I want people to sell and to sell cash your puts and calls and get premium. But if you see for whatever reasons a stock get hit really badly, kind of like C3.ai did a few weeks back, right? And it gets down to like 14. It was like $25 like a couple of weeks back, and now it's 14. And it got hit. If you go and buy some $20 covered calls expiring, some leaps, that expire in 2027, you buy some 20s for like $1.10, $1.20. That is not terrible. It's not terrible, especially if you do like 5, 10 of those. Because what are you doing? You're giving yourself a shot at having leverage over like up to 1,000 shares or more, right? The stock has recovered, right? It's like $18 now. Those are a lot more expensive. So you could very well then, if it recovers even more, sell them and then take that money and go and buy some shares. Nothing wrong with that. I just don't want you guys to go in and buy calls that are expired next week. 0 day to expiry. That's fucking insane to me. I just I don't see why you would do that to yourself. I don't see why you would do that to your liver. It's just not. It's not something that I want to preach, right? Dude is saying I did buy some puts on open when it ran up, just some cheapies at 5 and 550. We are frothy about 150-day puts to see if a pullback prints. Unorthodox, I know, small position. All good, my friend. Look, if you bring in money towards cash secure puts and premium towards by selling covered calls, cash secure puts and such, and then you sell more cash secure puts, with that premium, then that premium that you're generating, you can say, you know what, this is premium from premium. I can see how you could be like, this one stock ran up crazily, and I'm gonna buy a put. I don't see that as so terrible because it's such a small position, and it's something that you generated through like premiums of premium. So if you were to lose that, not the worst thing in the world. right? But I would stay away from, like, 0 day to expiries, 1 weeks. You know, I usually, when I do buy puts, it's like a month, at least a month out. So it gives me, time to see how the stock moves. And if the stock doesn't move kind of where I think it's going, and it goes against me, then it gives it time to recover, right? It gives me time to make a plan, or it gives it time to come back down where I was expecting it to. Because sometimes the charts, you read them, and they could be off by a day or two, or a week or two, right? So it happens. Dude, been adding to my smart position. When it drops below 150, I see the horizon on this one, not going heavy yet. It's all good, man. It's all good. Like I said, you don't have to go in heavy on any stock. Slowly add here, there, and don't just stay on one stock and, like, become like enamored with it. Um, Diversify your portfolio, right? Have an AI play, have a finance play, um, have a healthcare play, real estate, you know, cybersecurity, and so on and so forth, right? So that way, you mitigate risks. Let's say, like, for whatever reason, um, the sector that one of the sectors that you're investing in takes a really big hit, right? Like healthcare did not too long ago. Well, then, you're not going to see your portfolio tank 20, 30, 40, 50%, right? You'll see a drop of 5%. Okay, not terrible. You could mitigate by, taking advantage of the other sectors that are stronger, and then you could just go in there, and so until the other one recovers, right? So thanks. I'll close out my GME October 3rd as quickly as possible. No, JJ, it's all good, man. Like I said, I'd be very interested to see what happens and use you as a data point. That's not a problem. You don't have to close them because I said something. You have your reasons on why you opened them, and it's all good, man. Um, but like I said, I just if you're bullish on GME, just buy GME. You know, $30 cash cure puts out to, like, January 2026, or April, or December 2026, uh, January 2027. Bring in a lot of cash. And it's basically a cash grab, because GME is going to 32, 33, $34 a share. It's going to take time, but we don't know when that's going to happen. That's the thing, right? And people think, oh man, I'm reading all these charts. There's all these talking heads everywhere, myself included, right? And then they're like, everybody's saying this is going to happen, that's going to happen. And, like, nobody knows what's going to happen, right? I'm just giving you, like, an educated guess based on, like, information that's already out there. And that's kind of the way that I'm translating it. And then I myself, I'm basically, with all that information, I make up my own opinion, right? And I say this is based on what I have and what's going on, and the way that things are happening in the past. I think that this is very likely to happen, right? And that's it, you know. But this is why you got to do your own due diligence, my friend. Dude is saying I misspoke the other day on MSTR cover calls. The roll was out 3 weeks, not 1 week, out and up for 2K. I was in a rush, so not as huge as it read. Still good though. That's just half of my position. It's all good, man. It is all good. Susan Shop saying I bought GME January 27, $30 calls, paid about $5 for them. I'm okay holding and knowing my max loss is 500 and stock goes up in the next 15 months. Like I said, if you're gonna buy a call, right? Uh, make sure that it's a leap. And I think that Susan has got it right there, and it's giving you a little example of how to mitigate risks, right? Basically, she's giving herself a lot of time in case something happens with the stock. If it goes against her, she has a lot of time for that to recover and go the other way, right? So, and if you do, like, 0 day to expiries, you're done. If you do, like, month out, not terrible, but when it comes to calls, you know the more time you give yourself, the better. $30 calls for $5. not terrible. Instead of buying 100 shares, she could have bought five of those. Um, she's now got leverage of 500 shares. There's a very good chance that those $30 calls are going to end up, in the money sooner rather than later. And I can see, why she did it. Like I would say that's actually a better option than the ones that JJ did. Not that I'm condoning it, like I said, right? But I can see why that's a better option. You know, Susan saying, JJ, the good thing is, Savage, I had no idea RKT was a big squeeze March 2021. It soared 70% that day with multiple trade halts that day. Next day dropped 30%. Google AI, how trade a squeeze. The good thing with buying calls, you can't buy only those. Would you pay for them? 50-50 chance till October. Just know if stock goes up, be there to take your gains. Yeah. So Susan, I stay away from like short calls myself, right? Because it just if once they go against you, the chances are that you're done, because you have so little time to recover, right? And that data gets eaten away very quickly. As opposed to if you're out in 2027, you could have many things go against you in the near term, and then it recovers, because it doesn't take but a month or two for a stock to really go on a run, right? So you're giving yourself, a lot more of a cushion. There's nothing wrong with that. The more you mitigate risk, I think it's the best. Cindy B saying that's where the 90-10 rule comes in handy. That is correct, my friend. The 90-10 rule. That is correct. All right. 10%, that premium should be the stock price. 90%, uh, sorry, 90% should be the stock price, 10% the time price, right? If you paid 10% for the year and a half, that is amazing, right? Or less. Karen D saying good morning, everyone. So anyhow, guys, that's what it is, right? RKT is going to be a very good stock to own. Potential short squeeze as well, and it's one of those that, because of the it's a real estate play, and the more that real estate recovers, the more likely it's like Opendoor. The more real estate recovers, make no mistake. If we would have gotten bad news on the existing home sales, let's say it would have been 400,000 instead of 800, and they expected 550, 600. Open would be down 20% right now. Right now. But it's not. They had, they outperformed, and existing home sales are up, a quarter million more than expected. That's a huge deal. So now Open is like, okay, it's a real estate play. It's green rather than red. And for those that, sold some cash secure puts yesterday, you guys are smiling right now. Right? If you right now wanted to sell some covered calls on Opendoor, um, not a terrible thing to do, to take some gains, right? Um, you could go to November, sell a call. $10 November calls are 150 right now, right? Ask for 155 if you think it's gonna keep going up a little more. Ask for 160, 175 stinker. Why not? And see what this stock gives you. You know, give yourself a couple of hours. If it doesn't feel and you think that the stock is going to be a little weaker in the next day or two, because we still have Friday, some key numbers, some key data is coming out on Friday. So remember that, right? Anyhow, nobody ever cried or regretted taking money off the table, my friends. I'll tell you that right now. Cindy B saying I sold a rocket put for May 2026 for $440. I'm guessing that's a 20. If you did, I think that's amazing. Cindy B, good for you. Brought in almost 25%. Very, very nice. I knew that was a $20 put. That's all good. It's all good. Wing Commanders in the house. Did Brian buy stocks? I'm seeing red. That fool. That fool. Um, he doesn't know what he's doing, man. He's just always trying to pilfer everybody's data and it goes into like the stocks that everybody else is in. I have yet to ever see him say, "Hey guys, have you looked at this one arcane stock that nobody's ever heard of?" And like I did my own due diligence and um, here, look at this. You can make money. Like I've never seen that. He's always just like, "Hey, that's very nice. Good stock you're looking at. Let me look at the Bollinger. Oh, great. Look, it looks the resistance here." I think it's funny. He's a character. Anyways, Lisa saying I took 25% profit on Rocket Lab 19 December's $80 cover calls that I only sold yesterday. Thank you very much. $80. Wow. $80. You imagine if you would have sold some 70s. But still, nice profit. Nobody ever got hurt taking profit. And that's my point. Lisa took some money off the table, 25% profit. Thank you very much. And now she's going to wait for Rocket Lab to recover a little bit and I'm going to sell some more covered calls. Nothing wrong with that at all, my friends. There's nothing wrong with that at all. Good on you, Lisa. What else do we got here, my friends? Let's see here. Red Cat is down. I think they had a stock offering. Yeah, they did 172 million stock offering to fund maritime drone expansion. Today is a beautiful day for a Red Cat cash secure put. If you guys are looking to make some good money, a nice little cash grab, $10 cash secure put, Red Cat, ask for 165 December or November 21st. Go to November 21st, $10 cash secure put, 165. That is a 16.5% return right off the bat. Worst case scenario, you get Red Cat for $835. What is wrong with that? Absolutely nothing. They have a ridiculous amount of contracts, making bread month in, month out. They got governmental contracts. It's all about expanding. It's all about getting bigger. You don't get bigger by getting smaller. They are offering stock, and people are saying, "Oh my God, dilution." You know how many times fucking Amazon has done that? You know how many times Tesla has done that? If you're a good company, you're growing, you're going to say, "Hey, we're taking we're going into the vault. We're going to the vault and we're taking some shares out because guess what? Our stock is healthy. We're getting all these contracts. People want our company. Get some more shares out there." There's nothing wrong with that, man. Now, if they did something ridiculous, like they offered $3 trillion, okay, that's fucking insane. But you got to look into the fine print of the contracts, right? There's so many things and variables that have to happen, but not a bad thing. Red Cat is a $20 stock, and it's at $10 and change right now. So some $10 cash secure puts bringing $165 going out to November. What is wrong with that? I don't know. Take a gander, my friends, and look at Red Cat. It's there. There's a possibility to make some money. Alex is laughing at what Commander said. Hey, Savage, have you checked out USAR yet? I've been doing some nice and some catching your pussies rare. Yes, I checked it out. I checked them out. It looks promising. There's so many stocks, right? And if you guys want to look at, Alex's stock that he's talking about is USAR is the ticker. If you're into rare earth metals, that could be one for you. I am elsewhere right now. I'm kind of going into like the Ethereum market right now, and kind of indirectly owning it with Bmnr. So that's kind of where like I'm at this point. Opendoor, I'm at GME right now. I'm at C3.ai, RKT. So like I don't want to overextend myself, so to speak. But that's it's a very good stock to look into, and maybe put in your watch list. Susan is saying, Craig, when we write cash secure puts, does expiration matter much? Wouldn't it be better to write leap puts for more premium if stock price goes up? Doesn't return the same whether it wrote 30-day expiry or the year, however. Well, no. So see, this is the thing. Um, when it comes to cash secure puts, right? It's yes, it's you want premium, but you don't want to lock your money in for so long. And if you do, you gotta say basically, this is my bank account, right? Like this is like my rainy day fund. If you're gonna sell leaps, you better make sure it's on a company that's legit, that it's solid, and that you're basically putting money in the bank with. Example, SoFi, $40 cash secure puts right now are pretty much money in the bank. It's a cash grab because SoFi will be $40 a share probably in the next year. So you go to 2028 and say, I'm going to do a $40 cash secure put on SoFi. So you're putting $4,000 away and you're bringing in like $16, $17. Okay, that's almost 50%. Now, this is the caveat. You can't use that money, right? And if SoFi says in the next 6 months recovers and, I mean, not recovers, but just keeps running and it goes to $50 a share in the next year, then those are going to be worth like nothing, right? But there's so much time between now and then that anything can happen. And my thing is that, that's okay. So you're bringing in 50%. But if you do shorter term, and I don't mean like weeklies, I mean like a month or two, right? Say you bring in 15% in 2 months on a call, right? And then you bring another 15% 2 months from then, right? And then another 15. You do six of those in a year, that's 90% in a year, right? So you want to mix it up. You don't want to just be doing all like um, long calls like that, right? You don't want to do leaps, but you want to do some because again, cash grab, right? Like I don't like holding money in the bank. I don't get any growth out of it. So like what do? Like I go to Charles Schwab, I put my money on an ETF that brings me in 5% every year, no matter what. And then I take that ETF money and I sell cash secure puts out to like a year and a half, 2 years, and I get 45, 50% back. In addition to the 5%, that's 55% I'm getting back, right? I don't touch that money. And I let time happen. I let whatever happen. Unless the stock goes on a massive run like Palantir, then you could go in and close those and then see it where to go elsewhere with your cash secure puts. But the thing with cash secure puts and then just options in writing is you want to do it often, right? Because you want to have money coming in and out every month. And when you have like a variation of stocks and a variation of calls and cash secure puts, and then you're also out in a year and a half, 2 years from now to cash secure puts with. I mean, there's so many ways to bring in money, right? And what I do with my bank money is I put it on cash secure puts that are leaps, right? But I'd rather be writing like monthlies or bi-monthlies because they bring me in. I like to bring in 15, 20% when I do these writes that are like, a month and a half, 2 months out. That's kind of like the sweet spot for me. So that in a year I could basically make 100% returns. And if I do 2 years, that's only 50%, right? So does that make any sense? Let's see here. So Charlie C2 saying hi everyone. Commander saying Marvell closed the gap. Remember those Marvell calls I bought? Closed them out on a gap close for a healthy 300% profit. Mission accomplished. Good for you, bro. Yeah, I told you guys Marvell was down to like I think 55 or something, or like 52. I was like, this is you guys. This is a really great company. Very good. Cash secure puts would have been amazing. Um, you bought calls because you saw the writing on the wall and took a chance and you got paid. 78 was my target. Good job, bro. That's awesome. Lisa Sasha grab my first 100 shares of SMRT. Worst case, I lose $153. Let's hope for the best. You could have got them when they were 120, 110, but you know what? You're in. You're in. And now you wait, you cross your arms, and you it's a real estate play. So hold it for the next year or two, see what happens. And people say, oh my god, that's a whole year. It's not a long time, guys, let me tell you, right? The days are long, but the years are short, if you know what I mean. um Cindy B saying, on my taxable account, I am trying now to write cash secure puts into the next year so I can realize the gains in 2026. All right. Good to know. We Commander saying, next gamble, ASST, put credit spreads. Got me some 5 $2 250s, and somebody paid me 250. Yeah, somebody was talking about ASST. They did 750s and brought in like five something in premium. And I said, dude, I'm kind of telling people to stay away from ASST because it's just too toxic. I don't think if you haven't been trading for a while, you may not understand it. And I talked about you, Wing Commander. I said this, Wing Commander is actually doing some ridiculous shit where he literally is taking zero risk and can make money. So I don't know, man. You want to explain it to these people because it's insane. And I think it's hilarious how when you know what the fuck you're doing, you really could make money out of thin air, and that's just the way that it is. But again, I don't condone going to ASST. Yes, makes a lot of sense. Thank you so much for all your sharing. No problem, Susan. It's all good. Cindy B saying ASST is, but it is so addicting. Those premiums are fucking awesome, right? And that's why, like I said, look, I have like, I don't know. So like I did cash secure put, brought in money, then another cash secure put with that money, another cash secure put with that money, another cash secure put with that money that I brought in, and I just kept doing that. So like I minimized my exposure, and I think that my break even price is like 155. Um, so as long as we're trading above 155 on ASST, I'm cool. And October 17th, in a few weeks, right? If ASST is like $2 a share and I get put those shares, I'm selling them right away. And if not, and I get my cash back, that's going to be the greatest trade I've done up to this year, because it's just the premiums were just insane. It's like 65%, 70%, and it's just insane. Anyways, let's see here. What else? I wanted to share something else with you guys. Oh yeah, so Bmnr. For you guys that have been following me on this trade, I did some $10, $11 cash secure, sorry, $55 strikes on Bmnr, and I brought in like 1150. These were November strikes expiring, and $55 strikes, and I brought in 1150. Um, on premium for those. And look, basically Tom Lee bought 1.1 billion of Ethereum. That's what he did. He actually went in yesterday and he bought 1.1 billion dollars worth of Ethereum, because he sold stock in the future for $70. Okay, that's a covered call, my friends. He basically sold covered calls, brought in a lot of money, and bought more Ethereum. Pretty much what I tell you guys to do. You sell covered calls, right? Or cash secure puts, um, on stock that is like, greatly undervalued. And then you bring that premium, a lot of premium, hopefully 10, 15, 20%. And you bring that premium, and then you buy the stock at market price where it's at right now. So what did you just do? You literally just bought, free shares. If the stock recovers, you're going to get your collateral back. So great, you got your collateral back, and guess what? You got premium that bought you shares. So now you have free shares. What is wrong with that? And then you do it again. Then you do it again. And then you do it again. Rinse and repeat, rinse and repeat. And you keep adding to your position. You keep expanding your portfolio. Next thing you know, that one cover call and that one cash secure will turn into two, two turn into four, four turn into eight. And next thing you know, you're trading 50, 30, 15, 20, and premiums get that much bigger as you go forward. But it starts with one. It starts with one, my friends. Existing home sales, um, and how they're going to impact Opendoor. That's what I wanted to share. All right, let's see here. Here we go. Existing home sales directly influence Opendoor's iBuying business as a stronger housing market with increased sales provides a larger addressable market for Opendoor to purchase and sell homes, leading to higher revenue and potential better stock performance. Conversely, declining sales in a frozen housing market reduce demand for Opendoor's services, increase inventory holding costs, and can result in financial losses, significantly impacting its stock price negatively. Right now, we just had 800,000 existing home sales in the last month. Do you guys think this is a good or bad thing for Opendoor? Just gonna leave it out there. All right. Existing home sales impact Opendoor. Market demand and volume. Opendoor's core business involves buying homes directly from sellers and then selling them to buyers. When existing home sales increase, it signals a healthier housing market with more potential buyers and sellers, which directly translate to more opportunities for Opendoor to conduct transactions. Revenue growth. A robust market with a higher volume of home sales allows Opendoor to buy and sell more properties, increasing its revenue and potentially improving its profitability. In inventory management in a weak market, Opendoor can accumulate too much inventory, leading to higher holding costs and potential losses if homes don't sell quickly enough. A rebound in home sales helps Opendoor manage its inventory more effectively. This is the thing. Market was weak, and they ended up actually buying a shitload of properties everywhere. Now those properties are worth more. And now there's going to be a ridiculous amount of people that are wanting to own a home, and they're sitting on a gold mine. You think that those 800,000 homes that were sold, you think a lot of them were not open doors? Think about that. And that's coming out in the next quarter earnings. Ooh. Valuation and affordability. Existing home sales data also provides insights into home price trends and affordability. When affordability improves with declining or stable interest rates, more people can enter housing markets, which is a major tailwind for Opendoor's iBuying business. Impact on Opendoor's stock. Increased volatility. Opendoor's stock is highly sensitive to housing market trends and is considered a high risk, high reward investment. Positive news as a catalyst. Positive news, such as 800,000 homes being sold last month, right? Uh, Sorry, guys. I lost myself. Over the stocks highly sensitive to housing market trends and consider high risk and rewards. Positive news such as rebound in existing home sales can cause Opendoor stock to surge, even if the improvement is slight. It's not slight, not 800,000. Negative news as headwind. Conversely, a weakening housing market with declining sales can lead to a significant drop in Opendoor stock price, as seen when inventory rose and sales slowed. Investor sentiment shifts in existing home sales data can influence investor sentiment, driving stock prices up or down based on the perceived health and future outlook of the iBuying business and the housing market. And there you have it, my fellow simpletons and degenerates. Opendoor is going to make a lot of money. Racket is going to make a lot of money. The question is, do you think so? And I tell you right now, these shorts are really putting the vice grip on these right now before they run away. And they won't be able to. They got greedy. They got too greedy. They try to fucking they try to blow up uh these two companies, right? They try to have them file chapter 11. They had the fucking champagne on ice and they got caught with their hands in a cookie jar. And now they have to pay the piper and they're going to have to cover. They haven't started to yet. They kind of started, and then they figured, let's see what happens with all this data. Oh, Jerome Powell is going to go against, Trump. He's not going to cut interest rates. It's not going to happen. You know, so many variables, right? And everything seems to be going against them, just like everything was going for them earlier on. Now everything seems to be going against them. So, what is your conviction, right? What do you think is going to happen? Let's see here. Cindy B saying I got $106 for I got 106 for a 250 October 31st. Wing Commander Saga saying here's an idea on ASST. October 27 put credit spread $252. Madness. Juan Velasquez saying good afternoon. Savage from the Estepona, Spain, having a great time with my wife, of course. Had to write how to get more SMRT shares and S as well. Good morning, all. Juan Velasquez, how you doing? Good morning. I hope Spain is treating you very well, my friend. GM, all the same moneymaker. Juan, what is up, Juan? The explosion and expansion here in Spain in the Malaga, Marbella, Estepona is just unbelievable. The explosion. What explosion? Are we talking about? Are we talking about like a real explosion, or are you talking about explosion of people? Oh, real estate explosion. Okay, got it, got it. Dude, you worried me there for a second, man. Yeah, no, yeah, I'm looking at Getafe. Um, I'm looking at other places, man, in Spain because San Sebastian is another place in Spain that I'm looking to visit because of Alicante. Alicante is for sure the number one I'm looking at, and then San. Jesus Christ, I just said it. Um, I think San Fermin. I was also curious to to visit, but Alicante for sure because it's like a smaller Barcelona, right? And it's an hour away via plane. It's a lot more comfortable, not as hot, and it seems like it's a little more space, right? It's closer to like the mountains, and there's also like the ocean right there. So it's geared more towards families, right? It seems like a lot of people in Barcelona. It's Barcelona's for like the young crowd, the 20 somethings, the 30 somethings, the hustle and bustle, like a very big, like a New York City, right? In the European area. But I'm looking at more like I want to go to like what Portland, Oregon used to be, right? Like what Portland used to be, a little slower paced, still great, amazing food, still, amazing views. But Alicante is like kind of where I want to take the kids because there's also like a lot of family events that happen there, and I'm very curious to go and check it out. Let's see. So yes, nothing negative. I figured. All right, cool. Good to know. Good to know. Um, let's Lisa say I'm going to Madrid for the first time next year. Every winter I visit somewhere in Spain, Sevilla, Valencia, Malaga, Palma. Good, Lisa. There's a place in Madrid, man, um, called El Botín. It's the world's oldest restaurant, and I went there. We had the little baby suckling pig. It was pretty delicious. But yeah, it was cool. It was really really cool. Madrid was a lot of we stayed in La Latina area, and it's very close. I mean, it's in Madrid, right? So it's very close to like the palace, and everything's within walking distance. We went in the summer, so it was extremely hot. It seems like every other block we walked, we were going to a bar, and I guess that was our excuse to have a couple of beers, and then they would bring in these tapas. That was fucking awesome. And if you go to like a bar in Madrid, during lunchtime, you don't need to buy lunch. Like you can literally just, buy a couple of beers and they'll bring you like little appetizers, which are called tapas. And the more beer you order, the better the tapas get. Like if you buy 5 beers, by the fifth beer you buy, um, you'll get a piece of steak. So like they'll start off with like some potatoes, right? Like with the sauce, patatas bravas, that's like the thing, right? And then they'll move it over to like some cheese, or some croquettes, right? And then you order another one, they'll send you like a little, like a mini sandwich or something like that, right? And then you order some more, and they'll bring you like um, some champiñones, so it'd be like some mushrooms, with olive oil and herbs and stuff. And then next you know, you get like the shrimp. So you get shrimp, and then you get steak. So like, they try to, as you order, because you're giving them more money, their business more money, they're being nicer to you. And then we did that with my wife. um oh my god, like 15 years ago or something. And it was such a great time. um we went to the Pablo Picasso. No, it was not Pablo Picasso. um oh my god, I can't think of the name of this uh this painter. The guy with the big mustache. The big mustache, I can see his face, but I can't. Gosh, that's his exposition was going then. And then we went on a day that it was free. We didn't know. The museum was actually free, so we went in, and we saw Salvador Dali. That's exactly what it was. Thank you, Lisa. Salvador Dali. That's exactly the expo that was going on, and it was cool to see all his work. And in Barcelona, we ended up going to the Picasso Museum, and it was just amazing. And then you see all the Gaudi architecture everywhere, all these buildings he made, and the Park Güell. Why? I mean, Spain is amazing. Like, if I was to, I told my wife, if things get really bad, well, we're not gonna wait for that, but if things just get to a point where we just feel like, our kids' mental health is starting to to suffer because of what they're seeing, or the way that the country's moving towards, we're leaving. We're gonna rent our house, and we're gonna take our stuff, and we're gonna go to Spain. And then my kids love soccer anyway, so I'll put them in some soccer academies, all three of them. um, and I'll teach this shit. I'll teach people how to trade, and I'll teach English, and I'll make some money while I trade. So like, I'll be, if I could come up with $10,000-15,000 a month, not a problem, right? And I think that would be a lot of money. I think I'll be well. I think I'll do fairly well. So I hope things don't get that bad, because I really want my kids to be close to their grandmas, but I do not. Um, I don't see why I couldn't take my mother and my wife's mom with us. Like, I see us, like, just going over there, and like, maybe just outright buying a house for a few years. Just buy a house for like 250,000 euro, 300,000 euro, and like a big fucking house, like right outside the city, so my kids could get like, the campo life. That's what it's called. A nice open air area, and then see what Europe has to offer. And so they could get, I'll have them learn fucking French, or Belgian, or German, all right, whatever. And see what happens. I hope it doesn't get to that though. um the Real Madrid football stadium tour. Oh, dude, I love the. So I didn't do the Madrid football tour, but I did go to Barcelona, and it was amazing. Just so much history. Whenever I go to in Spain, right? Every year you have the Clásico, which is Barcelona against Madrid. Those are like the two main teams. Like, they're so amazing. And let me tell you, every year I get to watch the Clásico one or two times a year. I have to watch it, just because there's just so much history there, and the teams absolutely hate each other. Think Dallas Cowboys or Eagles, right? Against the Eagles, or like 49ers, Dallas Cowboys from back in the day. That's the type of rivalry. And it was really cool to be over there and see that, man. We were at Plaza Mayor in Madrid, and they serve you every time you order a drink, and just so nice. Plaza, I love Plaza Mayor. Vicente Fernandez just happened to be singing in Plaza Mayor the week we were there. and it was like a free concert, and it was just amazing. Just sitting in Plaza Mayor, you know, you kind of don't want to, like if you if you go to a restaurant in Plaza Mayor, those are usually not the best restaurants, but the wine makes up for it, right? Um, but like, if you go to like off the beaten path to like these like, older, bars or restaurants, those are usually the best, and we had just such a great time there. Charlie C2 saying Dali. Yeah, yeah. Lisa, you will have a great time here. Charlie C2, how are you? Hope all is well. Yeah, man. So look, guys, there is opportunity everywhere right now, my friends. It is all about it is all about just looking for it and being able to take advantage of the opportunity that the market's giving you, right? Let's see here. What else do we have right now, my friends? Um, Sorry, guys. I'm at this Red Cat cash secure put right now. I just put in a bid for 160. November 21st, $10 cash secure put for 160. It's kind of juicy. And I got caught talking here, and instead of just acting, I should have just acted. Um, it just went by me. But yeah, so let's see here. What else do we got here, man? Let's see where the opportunity is today. SoFi, guys, I told you sell $30, $35 cash covered calls out to January. Right, those $35 January covered calls, we're giving you 250 to $3. Could have taken a shot at bringing in some dough. Now the stock's taking a little hit. Um, I sold some AI $20 covered calls. I believe expiring in December. Brought in like 175 or something. Unity's is taking a nice little pop. Told you guys to sell some 55s a couple of days ago. Those were bringing in like $6 $6. So selling for 55, a stock that was I think at the time was $47 or something, and bringing in $600. That is not terrible. RX had a little pop this morning. It went up 7%. It's now down. It was up to 7%. It's now up 1.87%. So, um, you know, they're holding it down. There's no doubt about that. But I am just I have my $6 cash secure puts that I rolled to December, and I brought in some nice chunk of change. I have some $7 cash secure puts expiring March that I got paid over $3 for, and some $5 puts expiring January 2027. So let's see what happens, man. I'm just RXRX is going to pop, and when it pops, it's going to be something. Rivian is up 1574. I think Rivian got down to like 12.50 a share, something like that, a few weeks ago. And I was telling you guys, this is it, guys. You guys want to go into the Rivian world? You guys want to get paid to hold Rivian? It's a great car, great, just a great business overall, right? That would right now it's at 1574, right? Good technology, so much cheaper than going into Tesla, and it's just sitting there at $15 a share now. GME is being held down by a vice. It is 26.56. They want to close it under. They wanted to close under 27. They're holding it as much as possible. If it closes above 27 on Friday, it's going to get very interesting next week. SMCI is it's on its way down. It was nice little upwards this morning. Oh, look at that. Center 1834. What a wonderful treat. What a wonderful treat. December 19th, cash secure put, $18 cash secure put. Ask for 150. $150, $18 cash secure put expiring 12/19 brings you $150 right now. Why not? Why the heck not? Such a good company, man. Such a good company. Um, TerraWolf. TerraWolf is up 2.5% right now. Um, Bmnr is down to 53.79. If you wanted it to take a chance on Bmnr and sell a cash secure put, you could get right now $11 for a cash secure put, a $55 strike that expires November 21st, my friends. Not too expensive for you. Guess what? You could go to $50 cash secure puts expiring November 21st and ask for $8. That is $800. Essentially, you're buying the stock for $42 a share. So it's kind of an indirect way of owning Ethereum. Okay, I am at Ethereum. I'm finally gonna just set my flag down, put my foot down, and say this is where I'm at, and see what happens. Opendoor is up 12% right now, $8 a share. Very nice. November 21st, $10 strikes, calls, 160 right now. You get $160 if you sell a $10 covered call that expires November 21st. You want to go to a little earlier than that, go to October, sell a $10 for 85 cents. Ask for 85 bucks. See what happens. $85 for a $10 covered call. The stock's at $8. It has to move 25% up to $10 so that you can kind of be at risk of maybe having your stock called away. Not a terrible thing, my friends. Let's see here. BBAI yesterday, my friends. I told you guys, sell some covered calls. It's up 20%. I sold some $10 $12/19 expiry dates for 150, and those are sitting right now at 123. And I'm just gonna chill. And I'm gonna let the clock does. I'm gonna let the clock do what the clock does. All right. Smart is down to 154 right now. Down almost 5% today. So not a bad day to acquire some. It is a real estate play. Notice how the real estate plays, right? Seem to be taking a little hit today. Opendoor should be up massively, by the way, and they're trying their best to keep it down. Why would that be? It's just an interesting question. QSI was up 7% earlier on. It is now 165. It's still a cheap stock to get. And let's see here. Webull. Webull was up 5% earlier on. It is now up just 0.8%. Very interesting, my friends. I have some 1250 cash secure puts expiring 11/21, and I have some $15 cash secure puts expiring 10/17, and I have $15 and $20 cash secure puts expiring 1/16/2026. Give me my shares. I want those shares. And NVTS is it was up 6% earlier on. It is now up only 29 basis points. Very interesting what's happening. Figma is $55 at this point, down 5%. If you've been looking at Figma, December 19, $55 cash secure put could bring you $835 right now. If that's too expensive for you, go to the $50 cash secure put, ask for $560. So essentially, you're buying the stock at $44.40. If you've been looking to get into Figma, this is not a bad time to get in since it's down 5% on the day. QBTS was down 4% earlier on. That was your cue to go in and do some cash secure puts because it's recovered now. It is up 3%. Nvidia is down 1%. Uh, Nvidia could come down to 160. If it comes down to 160, $150 cash secure puts, terrible. 150 cash secure puts expiring, say, April. Those 150s would be around $15. That's a good strike, and that's a good return on your premium, right? That's basically 10%, but it's such a great stock. Like if I got put, Nvidia at 150 and I got $15, $16 for it, that's a win. You're owning the best AI stock, arguably, right? There is for 135, 34 bucks a share. That is not a terrible entry, my friends. Let me tell you. Unless some catastrophe happens, that right there is a great entry point. And if it, for whatever reasons, went down to like 110, fuck, that would be your cue to like go in and maybe buy some shares. Well, cash secure puts, do 110s out to 2027, bring in a lot of premium, use that premium to buy more shares and average down the ones you already have. It can happen. Always have a plan. Ion Q, it's $75 a share. Ion Q was $13, $14 when I was pounding the table saying, guys, this stock is good. When it flies, it's going to fly. $15 cash secure puts are not bad on this one. And here we are, $75 a share. DNA is down almost 5% today. It was down 6% earlier on. That would have been your cue to sell some December $11 cash secure puts and try to bring in 175 bucks. Okay. Ginkgo Bioworks. That company is going to 10x. Bullish is down to 67. It could come down to 50, 55. Let's see here. Red Cat is down a bit, and I'm still waiting. My cash secure put is just chilling there. So it's good. I'm trying to bring 160 bucks to buy Red Cat at $10. Lululemon is up almost 3%, 177 bucks. If I can get Lululemon to come down to 150, I may think about it. Through cash secure puts, of course. QQQs are down. Rigetti, oh my God, Rigetti's $33 a share, my friends. Rigetti's $33 a share, $10 a share, $12 a share, $15 a share. I was talking about it and saying, guys, this company, it's a good company. Cash secure puts $15, not a bad thing. $13, not a bad thing. It's at 33 now. It's going to 40. Just saying. It's all there. Serve Robotics was taking a hit yesterday. It took a hit yesterday, and I believe I told people, hey, it's 13 bucks right now. Guys, don't be scared. Go to November and sell some $13 cash secure puts. You could have brought in 250, I think, 250, 255, 260. Well, right now, those are a lot less. So, it's just a matter of where you want to take your position, right? SoundHound was down 3.5% earlier on. Is 18 bucks. SoundHound, I was telling people that $10, $12. Remember, cash secure puts on SoundHound, guys. 12, $15 cash secure puts. Not a terrible decision. It's $18 now. Those cash secure puts are worth a lot less. Just saying. It's all here, my friends. It's all for the taking. Right now, Webull is showing some weakness. $15 cash secure puts expiring in January, man. 380. You could bring in $380 right now if you sell a cash secure put on Webull, expiring a $15 strike expiring January 2026. Essentially, you're buying the stock for $11.20. It's a company that's going to be worth 40, 50 bucks. Um, it's there. I mean, it's there for the taking. Clean Spark. Clean Spark. I think I was telling people about Clean Spark when it was $8, $9 a share, and I was doing $7 cash secure puts, and then more news kept coming out, and I said, guys, $10 cash secure puts, $9 cash secure puts, not a terrible idea, you know. AAOI, fuck. AAO. I just needed to come up with some cash on Monday. If I would have held those puts, I knew this was gonna happen. If I would have held those puts on AAOI, I would make a lot of money. But I needed to come up with money um because Bmnr took a big hit. And I mean, I still made money. I lost money here. I lost $100, but with that money, I was able to make 1,000, like 11,050 or something like that. So I wish I had more money. What do we got here, man? What do we got here? What do we got here? Charlie Sue, how are you? Hope all is well. Things are good. Credit, do you know anything about Poet? It is being written up as a top AI energy data center like APLD and IREN. Because you can put in this beautiful uptrend, 60% today. Poet is $6 now. I did. There's so many stocks. I think at the same time as I was looking into Poet, I was looking into um, Rigetti, and I was looking into Domo, and I was looking into AAOI. And there's just so many stocks, Susan. Like you got to choose where to put your money, right? Like you only have so much capital. I wish I had like $1 trillion, right? And like I'd just be everywhere. That sounds fucked up. I don't wish I had that, but um, yeah. I look, as long as you're in it, you're making money. I think that's great, and it's another ticker people could just have a look see. Poet, POTET. Susan is saying, guys, have a look see what you guys think. Keep put it on your watch list, see how it behaves, see how it moves. Look at the what the board is like. Look at their CEO, look at their balance sheet, right, and see if that's somewhere that you feel comfortable going and putting your heart and cash into. Through cash secure puts, of course, right. Susan, both REN and APLD are doing great. I mean, both cash secure puts, of course. Good job, Juan. Juan knows the deal. Susan, Juan, I'm in REN cash appears too. I did 32s for January 2026, brought in $5. I see that Susan likes to do those nice little out there. That's awesome. You bring a lot of money in. That is great, Susan. Good for you. Good for you. Make that money, Susan. That's what it's about, man. You have a conviction. You say, this is where I'm at. This is where I stake my claim, and I'm okay owning this company at this price point. Give me that money. Great, 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 great. What else do we have here? AAOI is showing a little weakness, and I love it. If it comes down to $24, $25 again, I'm going to do I'm going to sell a $25 cash secure put on it and try to bring in $6, $7. Why not? Enough is enough. I want to own this. I've been at this just through cash secure puts since it was like $12. I was doing $12, $13, $14 cash secure puts, and it ran up to like 22 overnight one day. And I think it was during the Uncle Bruce show that I was talking about it, and then someone mentioned it. He's like, they were like, credit your stock. It just jumped like 50%. I was like, of course it did. And then I looked at it, and sure enough, and then I bought the next day those cash secure puts for like 80% in one day, which was ridiculous. And then I did some 20s and so on and so forth. And then it keeps yo-yoing between $20, $30 and $22. It keeps doing that. So keep an eye on AAOI. On the first show of weakness, then it goes down to like 23. Sub 25 is the key, right? It goes down to like $25, $24. That's kind of your cue to go into like $22 cash secure puts and bring in a few dollars. That's kind of how AAOI is acting, and it's just been acting like that for a year. It's a great cash secure put printing money printing machine. I got out of some months. I got out some months and bought back at 40 to 40%. I just can't seem to fold down some weight. I'm usually out in 3 to 4 weeks. Bought back at 30 to 40%. Good job, Susan. It's all good. It's all good. Nobody ever got hurt taking profit. Nobody ever got hurt taking profit, and I think that's awesome. I think you know what you're doing. As long as you keep making money, there's nothing wrong with that at all, man. Tesla's at 440. Jesus Christ. Amazon 220. Nice. Amazon. I'm looking at Amazon, guys. I'm looking at Amazon. If Amazon comes down to 210, that's my cue. That is my cue for some $200 cash secure puts, because I really want to have some Amazon. I don't have. I had some Amazon. I sold it because it ran up. But let's see. I think it went to like 240 or something like that for a second. 235, and I sold it because I was trying to get into Nvidia, and Nvidia came down, and I had made money in Amazon and Google, so I sold those. And Nvidia tanked, right? So I went in and I bought Nvidia, and then I've sold 170s that expired 2020, I think June 2026 on Nvidia, and I brought in a buttload of premium. And then that premium I've used for like all types of shit, right? So that's what we do, baby. That's what we do. Thanks again for your show. Have to run errands now, Susan. It is all good. We'll be here tomorrow, and we'll see what the stock market brings us, right? I mean, that's why we're here. I'm probably gonna be hitting the road myself. Look at Snowflake. Snowflake is $220. 22. I wish I would have bought it when it was 130, man. Lyft is down a little bit. Guys, Lyft. I was telling you guys about Lyft when it was $15, $14 a share. It's $22 now. But let me tell you right now, Lyft is going to $50 a share. So just to keep on your radar, right? Put it on your radar. Lyft is a good company. Why go into Uber? Somebody was asking about Uber and if it was worth it going into. And I said, why would you go into Uber when you go into Lyft? Lyft was like $15 that day. And I was like, look at Lyft. It's like 1/10 the price, right? Like 1/9 the price. Like, why would you pay, like all this premium for this stock when there's another company that does the exact same thing, right? And it's sitting at $15, $16 a share. That's kind of, you gotta just think these things, right? And say, hey, if there's a direct competitor for a company I'm looking at, and they have they're like grossly undervalued and they're 1/10 the price, why not? Like, why go into like CrowdStrike, at $300 a share when you could go into like Sentinel One and get for one for 6% of what CrowdStrike is, you can buy a share, right? Like, instead of buying one share of CrowdStrike, you could buy like, I don't know, 30 shares of Sentinel One, so, or like 20 shares. It makes no sense, right? Anyways, my fellow simpletons and degenerates, I am going to hit the road. I actually have to get ready because I'm going to go and I'm going to get an MRI done on my lower back, and then they're going to see how things are going. I'm feeling, not great today because yesterday I had physical therapy, and they made me do these new exercises. So I'm kind of sitting on my hitting pad right now. But it's I'm very tight this morning. I'm going to go stretch a bit right now, again, and then I'm going to get on my way so that I can go and get this MRI done. But I will be here at 8:30 a.m. tomorrow again, so that we can talk shop and see what the markets are at, see what they're giving us, and hopefully, we get more of the same. Some stocks are going to be up 10-15%. Some stocks down 10-15%. Volatility is the name of the game. It's the word of the year. And so here we are. Jude K, thank you for watching. Susan, Juan Velasquez, Charlie C2, Lisa, Moneymaker Juan, Wing Commander Cindy B, Charlie C2, Alex, Susan Shops. Let's see who else. Dude, JJ, Andres de la Torre, um, James of the Trees, Tom Kaufman, CKT, Ricardo Canales, always be writing, Zed Real Estate, Mr. P, Beach Boy, and Double D. Thank you for watching, guys. I appreciate you guys very much. We keep hitting milestones on this channel, and I appreciate it. It's because of you guys, man. I got an alert saying that they've watched my that I've been watched over 10,000 hours this year on YouTube, and I think that's awesome. And I'm very excited to see that because it's a milestone, right? And you think, who would watch me for fucking 10,000 hours, right? And then I'm like, oh, wait, I'm literally making people money, right? And people have questions, and I'm there to answer them as best as I can. And I've tried to become the channel that I wish was around when I was looking, to really learn this real estate crap, and like just the regular Joe channel, man. The regular Joe, regular Jane trading channel where people come in and they don't, there is no stupid question. There is no dumb question. You go and you ask your question. Nobody's going to make you feel like less of a person by you asking something that maybe everybody knows, but, at least that watches this regularly. But if you don't, that's okay. That's what we're here for, right? We try to answer as best as we can. I try to give you the market from my perspective, and you guys know that I trade every single ticker that I talk about, 90%, 95% of them, because interest and full disclosure, right? And so that I'm going to be a little biased as to, how I talk about these stocks, but, I'm also going to give you a neutral outlook on companies that we're looking at, right? And although the stocks that I'm in, I want them to do better, and of course I'm going to be a little biased when it comes to telling you these are great companies. The data is neutral, right? The data is the data. So like you got to make up your own mind and see and say, kind of, this is where I want to be. This is the stock that I'm interested in. TS, thank you for watching. Kilua Dre, thank you for watching. Um, Appreciate you guys very much, man. And let's keep growing. Hit that thumbs up, hit that share, button. You know, uh, if you guys want to watch my old videos, it's all good on the background. Just let them play. If you're not doing anything, it's all good. It helps this channel get more traction, right? So that more people can see, the good old Savage out there just talking about the markets and, giving it our take on it and trying to take advantage of the red days and the green days. We're not at the mercy of like any specific trend because we're making money day in, day out. When I see people saying that they made $10,000 on some company that I talked about because they closed their position, I see somebody say, I made $1,500, I made $2,500. Somebody made $300, $50. It doesn't matter, right? It's just as long as you're making money, I feel great. Thank you for watching, guys. Much appreciated. We'll see you guys tomorrow, 8:30 a.m. California time, same channel. Thank you, guys. See you guys tomorrow. Have a great rest of your day. Peace out.